All right, welcome back to this week's breakout watch list from June 26th to the 30th. In this video, I'll be covering the top 10 swing trading setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that I'm going to be using to break down each of these setups. And speaking of setups, here are the 10 stocks that I'll be covering in today's video. I don't want to spend too much time here, so let's jump to MarketSmith. First stock that we have is AEHR. This is in the semiconductor group, which right now is the 11th out of 197. We know how strong NVIDIA has been. We know how strong the semiconductors have been. But after a couple weeks of pulling back, they're now jumping back on my radar. So with AEHR, it did have this move off the 200-day moving average from around $23 all the way up to $44 before pulling back to the 21 EMA. You can see each of the last 4 trading days have held that 21 EMA, which is nice to see because it's also pulling back basically to previous resistance to the left side of the chart. And that's exactly what I want to see on a pullback. Ignore the volume on Friday. There was some rebalancing, so not as much credibility within the volume on Friday candles. But price action is price action. Inside candle closing just below $40, above the 21, below the 8-day EMA. Inside candle showing volatility is tightening up. A couple more days of doing that, or even a down day in the market on Monday, Tuesday, to retest this 21 EMA. Because of how loose and kind of like whippy AEHR can be, I'm going to be trying to not take this on strength, but take this on relative strength compared to a market down day. So where the market's down Monday, Tuesday, Wednesday, whatever the day it is, and this is holding the 21 EMA on a pullback, that's where I would want to initiate a position and get my stop loss under the low of the pullback around 37.73 for AEHR. The next stock that we have is BRZE. This is in computer software enterprise, 19th strongest group out of 197. So we do have that group strength with it. Most recently had earnings. Earnings were still negative. Sales were up 31%, but the stock did rise about 16% on 630% the average daily volume. And it's really the action of the stock after the earnings pop that I really like, because while the market started to trade down last week, this basically traded in the wick right about around $40. Pulled back later in the week as the market pulled back, but put in an inside candle on Friday while the indexes were down. This is one that I'll just be looking for initial respect for 40. So if we open above 40, pull back, hold that area, and then taking out Friday's high, 40.91 as a potential entry point, then I could get my stop loss under 38.60, just kind of like the lows in the last 3 days, and still keep my risk very nicely managed for BRZE. Sticking with that computer enterprise software group, we have DT. This is the first time I think the stock has come up on my radar. Let's go to a weekly chart just so you can see. We've been basing nicely, and then most recently broke above the previous resistance on above average volume. And since then, we've been pulling back on lighter volume and just consolidating there, which is really, really healthy. We had one bar where we actually gapped down, rallied, closed right at the high of the day, and then another gap down. And we seem to be holding this $50 area. And the nice part is with this consolidation, we also have the 21 EMA catching up, providing support right around that area. So if we place our stop loss under 50, under the 21, we have multiple areas where if we do break below that, it's a larger chance that we're wrong in the short term and we need the stock to consolidate, pull back to the 50-day moving average before a meaningful move higher. But I do like that it's trading right at that 21, right below the 8-day EMA, and really tight price action all last week. So this is an easy one, just above the high of last week. What would that be? 51.49, call it 51.50, and then get your stop loss under $50. Very, very tight risk right there on a group that's been working, 19 out of 197, and on a stock that's just breaking into a stage 2 uptrend, pulling back to a round number, 21 EMA. It defines a risk there for DT. Very similar setup to DT. Next is GLBE. Again, same group, computer software enterprises. Very, very similar action. Nice volume up through resistance. We'll go to a weekly chart so you can see this. We broke above both kind of previous resistance areas here. The first one at 34.82, second one around 37.37. Since then, very, very light volume last week as we pulled back to the 21 EMA. Strong closing ranges on each of those pullback days. So it looks like we had a shakeout and then close high in the range, shakeout, close high in the range, shakeout, close high in the range. And now we can also correlate that shakeout with the 21 EMA along with the previous resistance over to the left. And that's exactly what I'm looking for in a pullback. Very light volume, respecting a moving average, respecting the previous breakout point. So a couple different ways to play this, kind of with AEHR. If we have weakness in the market Monday, Tuesday, Wednesday, and this holds the 21 EMA and starts to curl up, getting in right around the 21 EMA so you can keep your stop very, very tight would be one way to play it. Otherwise, if the market's strong, just play this on strength through Friday's high, 37.40, with a stop loss under the low from Friday for GLBE. Next, we have a stock that I think everyone on FinTwit is talking about, so take this with a grain of salt, MNDY. This is in computer database, fourth strongest group out of 197. We have increased estimates in 2024 and 2025, so that's nice to see. This most recently had earnings, what day was this? On the 2nd of June, where the stock rallied 28% on 520% the average daily volume. And similar to BRZE, just traded sideways since then. It seemed like the market was so extended in the short term that some consolidation after an HVE, I think this was HV1, highest volume in a year, HV last earnings. Anyway, pulled back to the 8-day EMA, had a really nice shakeout day on Thursday before closing high in the range, and then very, very tight action, up about 0.5% on Friday while the market was down. Again, we can't take Friday's volume very serious, but Thursday's volume we can, and that nice shakeout, nice closing range on above average volume is exactly what you want to see. So if we get continued consolidation under this $400 area, that would be a nice pivot to play. I would rather take this on strength because it's just consolidating more and more, and we're still pretty far away from the 21 EMA. So unless we're going to take this kind of on relative strength, market weakness in 2 weeks, I would just be looking at this at $400 to really get going. Or you take part of your position at the high of Friday, $396, and then add to it through $400 for MNDY. Back to computer software enterprises. This is Monday.com, MNDY. This is one that had a nice rally and then very, very tight price action around 150. I did trade this from 150 up to about 176 and then sold it there. After a couple weeks of consolidation, pulling back to the 21 EMA while volume is drying up, it's jumping back on my radar. So we absolutely see the theme that we want to be focusing on this week, computer software enterprises, multiple stocks on the watch list coming from that group. So let's see if that entire group can get going and we can get some exposure within that group. So with MNDY, I noted the volume pulling back, earnings now positive and up 115% year over year, sales up 50%, after-tax profit margins improving as well. Another thing to point out is fund ownership drastically improving in March from 160 to 206, which is nice to see. This one, because it's kind of undercutting the 21 EMA, I want to take this on strength, breaking out over Friday's high, which would be 173.96. Call it 174, and then we can get our stop loss just under the lows of this pullback around 164. For Monday.com, MNDY. Next, we have ONON, and this is a personal favorite setup of mine because I don't think a lot of people talk about it, and we'll go through it really quick. So ONON popped on earnings 143% or 149%, sales up 90%, after-tax profit margins improved. We had a nice HVC type trade from, from around $27 up to $31 in 2 days. Nice quick move there. From there, we did break to the downside on above average volume through the 50-day moving average, and this is kind of clearing out all of those swing traders, canceling traders that really use the 50-day moving average as their guardrail. And while I do as well, I do like to see this quick move under the 50. You're looking for an initial rally back up to it, and since there's been this quick of a move, the first rally typically fails after uppercutting the 50-day moving average or any round numbers like $30. And as you can see, that's what happens. We consolidate, we run through the 50-day, fail, pull back, and now we're right on the 8 and 21 EMAs, price closing above those, below the 50-day, which is now flat to declining, and we have a nice round number to form our pivot entry point before the 50-day moving average. So I really like this setup because under the 50-day, canceling people forget about it. But as it breaks back through the 50-day moving average, it gets back on everyone's radar. And this is kind of like a stock that was a potential leader. Everyone's forgetting about it. Now they need to rotate to that after some money's rotating out of tech. So this is one that I'll be looking at through $30. And ideally, I get in below the 50-day moving average, see some follow-up buying through the 50 so I can keep my stop under all the lows here around $28. That's a little bit loose, about 6%, 5.5%. So I might split my stop half at 29, half at 20, 28 or something like that. So that's ONON. And this is the higher low 50-day pop setup that I've been working on. We'll see if it plays out here. Next we have TTD, the trade desk. This is another one where I want to go to the weekly chart to just show not quite a double bottom base with the second one undercutting the first low, but a significant pullback that would shake out a lot of weaker hands. From there, rallied up, got really tight around $60, pushed for a couple weeks, and then had a secondary push up to, I think, about $75. You can see 1, 2, 3, 4 tight closes on below average volume. Back to the daily chart. With this, I'll be trying to get my stop loss under the 21 EMA, which right now it's at 73.76, 3.4% away from price. So one way to play it just through Friday's high, 76.59. Stop under the 21 EMA, that's only about 3.5% risk, which is nice. Otherwise, if you want to use Thursday's high, 77.50, that would be perfectly fine as well. That would be around 4.5% risk for the trade desk. Got two more stocks for you. The first one is Uber, UBER. This is in leisure services. Everyone knows what Uber does. Let's check out a weekly chart on this one as well. We're above the previous resistance, and we basically just drifted higher before consolidating right at the previous week's high on below average volume while the indexes were down, which signals that relative strength pickup right there. So back to the daily chart. Because this is kind of not quite wedging up, but you do have a flat top entry point here, but I would want to get in kind of closer to that 8-day EMA so I could get my stop under the lows of that pullback. Just because recently the market's been pulling back. If the market's going to continue to pull back and put pressure on this, it's more likely that it's going to pull back to the 21 EMA. And if I'm going to try this trade while the indexes are pulling back, I don't want to be buying up here and then getting stopped out for a larger loss kind of under the lows here. I want to keep my losses very, very tight while the market's pulling back. So this is one that I'll just be looking at kind of closer to that 8-day EMA, 42.25 area, and then get my stop under the low from that pullback, 41.77 for Uber. And the last stock that we'll cover today is XPER. This is also semiconductor, slightly different group, so 64th out of 197, but still in that semiconductor larger group. Obviously, this is an IPO, IPO'd September 30th, 2022. From then, went through a nice bottoming phase. Again, not quite a double bottom because the second low doesn't undercut the first low, which would have been ideal. But what I really wanted to point out is the heavy volume bars most recently. We have 1, 2, 3, and then outside of kind of 2 down days that caught on the 21 EMA, and I think this was quad witching day, so I wouldn't consider that as credible. But the first one caught on the 21 EMA, immediately reversed and started uptrending. On this one, what I would be looking for is a pullback to 1250. We can see on Thursday we undercut it, the low is 1249. On Friday we held it, the low is 1251. So we have an undercut, hold, and hold of the 1250 area. So on Monday, if this comes into 1250 and then starts to show some buying support where we make that turn, I never want to buy just randomly as it continues to pull back, but if I drill down onto a 5-minute chart, and this is like my main focus of the day, and this is pulling back to 1250, comes into that area and then starts finding buying support and starts curling up, I would want to get in right around 1250 so I can keep my stop under the lows here, 1230. You have a 2% risk there. This is a name that has been getting really nice accumulation type volume, working up the right side of the base, and is now over the previous resistance here. So previous resistance, 1242, previous highs there. We've pushed that level on above average volume. Now we're pulling back and respecting 1250 for the most part, closing above it every single time. That's the type of price action that I want to see out of this name. It is thinner, $13 stock, only trading 300,000 shares. So I probably wouldn't size this up like 25, 30% of my account, but could be a performance booster for you. This is XPER. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you guys in the next one.